This is Virgin Galactica, a company that is revolutionizing space travel as one of the only publicly traded space companies in the world. Ran by the infamous Sir Richard Branson, in today's video we look into this growing stock that goes by the ticker SPCE and review my $2,000 call position in the company. You will not believe what you see. Before we begin, I want to let you know that SPCE is one of the most hyped stocks on the internet right now. There are plenty of YouTubers like this guy, the Wolf of Dubai, who essentially make daily videos on it claiming it will rise to $500 a share.
Now let's dive into the $500 mark. Now I believe to be a $500 stock, Virgin Galactic has to do
In my video today, I will look at SPCE from both sides, attempting to look at both the positives and the risks associated. So if you're looking for a pump piece that will make you feel good about the investment you have already made, I'm sorry, but this is not the video for you. To give you a brief summary, Virgin Galactica is attempting to create a space tourism enterprise that essentially hopes to morph into a hypersonic travel company. While this idea may seem outrageous to many, the progress Virgin Galactica has shown with earlier test flights has demonstrated that space tourism is very possible and operations are set to begin as soon as next year. The business model goes something like this. Millionaires and billionaires who are eager to fly to space and experience true zero gravity will pay around $250,000 for a ticket. That may sound like a hefty sum, but us peasants just don't understand the ultra luxury market. Renting a yacht for a week costs $500,000, an island $230,000. There are plenty of people with way too much money ready to drop some serious cash to see the Earth from above. The company claims it has well over 600 reservations lined up. On the other side of the coin, however, if we assume that every single one of those 600 reservations actually goes through with their plans, we would get a potential revenue of $150 million. Virgin Galactica bears make this the highlight of their case. How is a company that currently has zero revenue and a potential revenue of $150 million able to receive a market evaluation well over $6 billion? That's 40 times potential sales. Quite a multiplier for such a niche business. And this is where the arguments start. On paper, this company shouldn't be close to the price it is, but we are living in 2020. The market is changed. There are countless companies who struggled financially, focused on growth, and received outrageous evaluations, and yet in the end, after years, came out on top. Just look at Amazon, which didn't report a profit for 14 years, or 54 straight quarters, and yet today, it has become one of the most reliable and safest investments out there. Or Tesla, which parabolic rise has earned it a seat at the S&P 500. The market today rewards different, unconventional metrics. How disruptive is the technology? How secure is the market? And what is the long-term vision of the company? Virgin Galactica is on the edge of proving it could send civilians to space for a fee that's acceptable and marketable. And it's not just crazy Robin Hood investors who trust the vision of the business. Prominent investors like Chamath Palahniuk have invested personally $100 million. Even for the billionaire, this is a significant sum proving he sees the potential. Here's a clip of him saying that this was the easiest investment decision he has ever made in his career.
With these investors, I'm sure it's going to be a fun day. They're going to see great things, but at the end of the day, they're going to want to know that their investments are going to pay off. This is kind of like an ultimate moonshot, if you will. How do you convince them of that?
Well, I actually think this is one of the safest and most interesting investments that I've ever made. In fact, I felt so confident after doing the diligence that I decided to invest an additional $100 million of my own money. And the question is why? And well, what I saw was a hardware business, and you can see some of the hardware behind me, but with margins that look like a software business. So gross margins approaching 70%, EBITDA margins approaching 50%. It's a kind of a business that's very rare and unique, very difficult to build, not a lot of competition, incredible amounts of demand, very constrained supply, huge margins. So I don't think it's a moonshot at all. In fact, I think this is one of the most interesting, value-laden investments that I've seen in a long time.
The entire price outlook on SPCE rests on just 2 slides from their presentation. The estimated revenues for each year based on the number of passengers flown. If all goes to plan in the next few months, here is the deal. At the end of the day, we can reliably estimate the company's max stock price by taking a look at something called the price to sales ratio. This is basically how many times sales is the company worth. Just so you get an idea, the market segment with the highest average PS ratio right now is software, which sits right around 8. But let's assume Virgin Galactic is really special, and we are in somewhat of a space bubble. Let's take a look at another company trading at a high PS multiple, Shopify, which earlier this year hit almost 60 times sales. We know from the presentation that Virgin Galactic believes it will earn $210 million in 2021 in sales. If everything goes perfect and we take 70 sales as the ceiling, we know that the market cap of the company should be right around $14.7 billion, giving us a stock price of $62 a share. That's quite impressive, but many things have to go right. On top of this, a large number of bulls will claim that you should look at the future sales as the ceiling. If Virgin Galactic is able to prove that they indeed can accomplish all their goals, it will without a doubt improve investor confidence on the future growth of the company. Going back to that slide, we can see that in 2023, sales are estimated to be at $590 million. If we use that 70x multiple, then you can theoretically prove that a stock price of $176 a share is possible with that kind of PS ratio and that kind of revenue. Now, before you click off the video and call me crazy, let's take a look at some of the headwinds that the company is sure to face in the coming months and years. While these projections are nice, there really isn't anything stopping a Virgin Galactic employee and showing whatever number they so please as the estimated sales. These are mere projections, and guess what? Projections are wrong a lot. Remember, this company has yet to send a single commercial flight to space. In fact, they haven't even received their FAA certification yet. While chances are on their side, there are some serious concerns brewing. If there's a severe mishap on any of the test flights, we're going to get pretty close to bankruptcy. Let's not forget spaceflight is incredibly dangerous and has resulted in deaths before. In 2014, although due to pilot error, a Virgin test flight crashed, resulting in a death. The same scenario today would doom the company. On top of these dangers, we have lockdowns preventing and delaying test activity that is critical in getting Virgin their FAA cert and ensuring that commercial operations can begin next year. We don't know when the health crisis happening across the world will stop, and until then, space tourism is going to be a hard sell. Finally, we have one of the most underrated and least mentioned problems. All these projections I did earlier were based on the fact that there's currently 234,342,464 Virgin shares in the market. That can change at any time with share dilution. Companies who are in need of cash often issue new shares in order to raise money, and doing so, they dilute the value of the current shares that you and I have. If Virgin happened to do this move, all of our projections change, and without a doubt, the price of the stock will come down as well. Taking in the positives and negatives, I'm going to now reveal my position in the company. Right now, I have 5 $25 calls for the 4/16/21 expiration that I paid $3.31 for. This was way back in early November and late October when the price of the stock was hovering right around $20 a share. At the time, it was known that a test flight would likely occur before the end of the year. Looking at the chart, my belief was that with a successful test flight, the company's stock price would reach those levels we saw in February at the very least. I also saw some buying activity from ARK Investments and figured that eventually this ticker could become something like a Palantir Technologies on forums like Wall Street Bets. With these long-dated calls, my plan was to hold until a test flight happens and sell afterwards if successful. I'm currently up 156% on that position and planning on holding until the test is complete. I truly believe in the short term that the stock could experience an exponential rise given it picks up enough hype following the flight to space. Afterwards, it's anyone's guess. I'm confident that there will be volatility one way or the other, but regardless, with triple-digit returns on my position, I will have an extremely hard time holding on to these calls without cashing in. Thank you guys for watching. Please make sure you hit that subscribe button if you enjoyed, and as always, leave a comment below. I want to know what your positions in the company are and what you think the price target should be.